Good morning, everybody. Hope everyone's doing wonderfully well as we get started on this Tuesday morning. Hope everything's going all right. You can see my background is a little different. This is actually my hotel room here. Well, we got a little cottage here in Orlando. Yes, we're still in the way of the storm, but we were under mandatory evacuation there just outside of Tampa as this storm comes barreling towards us. So appreciate, by the way, all the well wishes. I've seen a lot of them, and I do really appreciate that, guys. And if it was me, I probably would have stayed. Probably stupid to do that, but with the kids, we're definitely out of there, taking care of the kids for sure. So we're here in a different location. I'm on my laptop. I got my multiple screens on either side. You just make doing life, right? Just like in trading, we have to accommodate and adapt. And adaptation is so important for trading, right? If you think about it, market conditions can change. It can go from bullish to bearish in a day or two. Traders that adapt the quickest will do the best, right? You have to be able to recognize the change and then hop on board in that direction. Very hard to do. Even I struggle with it from time to time, but obviously the ones that do it the best make the most money. All right. So let's take a look at what the markets are doing here. If we flip over to the chart of the S&P 500 in the pre-market, you can see this was yesterday, right? So yesterday kind of started choppy sideways to lower. We talked about that yesterday morning. And then we saw a bigger drop to the downside in the later portions of the day. Overnight, we kind of had sideways chop. And then at 4 in the morning, the buyers kind of reemerged, floating us back to the upside. So interestingly enough, we're kind of hovering here at a point where we're up on the day, but we're not negating the entire drop from yesterday. Now, listen, yesterday's drop was not a big drop. Basically 1% on the Nasdaq, 1% on the S&P. But it was interesting because it came on the heels of that monster rally, right? If we go back here, in fact, let's flip over to the daily chart. If we look at the daily chart, this was last Friday on the jobs report. So you had the jobs report push up. And what did I tell you guys happened on that move, right? If we go back to the intraday, I want to show you guys this. I'm going to get rid of the pre-market and after hours trading. But if we go back here, this was so suspect, and I've seen this happen so many times. We're now on the 10-minute chart of the S&P 500. The market opened up on Friday, and for the first hour, it sold off. And look at the time frame. Look at exactly the time frame. You can see it at the bottom of the screen right there. At 10:30 a.m. to the second, to the minute, the market stopped selling. And so what does that tell us? Well, what we know is institutions tend to want to sell early in the day because that's when the volume is the most, right? So they're the ones that are selling and ultimately dumping. But once it gets later, especially on a Friday, the volume dries up. They can't unload the size that makes it worth their time, right? If they're going to only unload 100 shares or 1,000 or even 500,000, it doesn't matter at that point in the day. They do it early in the day when the most retail buying is there. And that's again what we have. So if we take a look here, this was Friday. We opened up. We talked about this, right? I've talked about this many times about how the narrative has to stay bullish until they exit enough of their positions, right? Until essentially they unload their positions to the retail crowd. And so there's your selling. And then on Friday, what happens the rest of the day? Well, look, from that point on, it was a float higher. And then look, late in the day, there's literally zero institutions because they're already on the weekend, right? They leave early for the weekend. The big boys do. And then look at this right up there. And so it was interesting to see then what we saw on Monday is kind of a reversal of that and a little bit of late day selling. And then obviously we're coming back in with kind of this reemergence, this attempt to reemerge this bullish narrative in the charts. All right. So we are looking at a slightly positive open here. But again, most of the move up from last Friday's jobs report is now null and void based on yesterday's sell off. Okay. The levels that we're following here on the SPY. Number one, this high right here. So this is your highest point. That now becomes your level to beat. If you get above that, the march to 6,000 on the S&P should continue. Like I've said in the past, we're using the last all-time high right here. Right here it fell. This was the August swoon. The big bounce just missed the hitting highs until we broke up here. So this is your previous high. This is your current all-time high. Previous all-time high, current all-time high. So my point being is that on a technical basis, remember we discussed at the beginning of this game plan how adaptation is the most important. You have to be ready. If you confirm below this level on the spiders or the S&P 500, right below there, that's where all of a sudden the bias goes heavily to the downside. As long as we're in here, like as long as we're above this previous all-time high, to be honest, neutral to positive bias on the markets. As skeptical as I am about the jobs data being true. And by the way, let's talk jobs data real quick here. Does everyone understand that if you looked at the numbers and you delved into the numbers, that there was a ton of part-time work in there? In fact, full-time continues to decline. Full-time work continues to decline. And the government continues to do or be one of the biggest hiring players out there. So again, you got to take these jobs reports with a grain of salt. And we know the revisions, right? The revisions are plentiful. All right, just going back to the charts here, we know our two levels on the S&P 500 or the spiders here. Again, anything above this level, neutral to bullish. Anything above here, the march to 6,000 continues, and that's pretty much full out bullish. Anything on a daily close with confirmation below this level, and you look to the bearish side. All right, next up, we got to take a look at this chart, guys. So do you guys remember yesterday I was highlighting TIGR to you guys? All right, so this isn't TIGR. We're going to talk about that in a second. But that was a China stock, and I was saying how like stocks like Futu and TIGR and Pinduoduo, the stocks were ridiculous. And remember, I was the one a month ago that literally showed you that I had a massive call options position on the FXI, which is the ETF that tracks China. So obviously I was insanely bullish. But remember how I just talked about going bearish and saying, guys, these things are going to pull back big. Well, look at the technicals. Here's support. Here's support. If you connect the high from April 2022 to this high here in June 2022 to this high here in January 2023, this parallel, perfectly parallel line with the lows, that was tagged in yesterday's session in Hong Kong, the Hang Seng market. Look at that drop, 9.41% drop in the Hang Seng market. Well, guess what? If we go to charts like, let's go to TIGR, which I actually showed you guys in yesterday's game plan. This was yesterday, by the way. It opened up, and by the way, this is where it was trading yesterday when I was doing the game plan. It opened up. It closed at 1147. Look at pre-market. Pre-market, if we bring up my extended hours, right now it's back to $9.44. It traded as low as 816. Again, understand this, guys. If we go over to yesterday, look at how high this was. This hit yesterday, $14.99. So from to basically 15 down to $8. Boom. There it is. If you want to see something else, look at Futu. Look at the daily chart of Futu. Okay. So here's your move up on Futu. So from September 13th, it gained, what did it gain? 100, I don't know how many hundreds of percentage points. Let's do this out because I think it's just so remarkable. But my point being is don't FOMO in. All right, 130%. So in less than a month, basically 3 weeks, 130% gain. You can't be buying. I don't even care if it's here. You still can't. You, as a disciplined trader, you cannot be buying anywhere in this upper range because you don't know when it's going to reverse. Now, for me, you know what I did this morning? I said to myself, wow, this Futu, which closed, mind you, at 129 bucks yesterday, is now trading at 104. 104. Incredible, right? So the kicker here is this, is that essentially now you're starting to say, okay, well, how far does it have to pull back before we start to buy it for a bounce? So what do? I find my pivot high, my previous pivot high. Now, let's talk about pivot highs. Let's analyze what is a pivot high. How do you find a pivot high in a chart? What you do is you look for the highest point with significant time on each side. So notice how the price action on Futu climbed, and then look at how long it took. It consolidated and pulled back until finally breaking out. That makes that a pivot high. So you find your former pivot high and you say, okay, well, if you flush back to basically $80, guess what? That's going to be major support. Now, you know what else you do? You want to find two factors. Always remember, two factors. So if you do this, right, so you can do this low or this low, but let's just try here and see what we get on this. So you also have a 618 Fibonacci there. In fact, I'll almost bet that if we drag it to this low right here, it's exactly a 618 Fibonacci. Look at that. So from the lowest point to the highest point on Futu, a 618 Fib is aligned perfectly with that $80 to $82 level. So now, do I know if this is going to pull back? The answer is no. I have no clue, right? I mean, well, and I should listen, it's already pulling back. But my point is, do I know if it's going to pull back to 80 to 82? The answer is no, you don't know. But what you do know is that if it does, that's major technical support, right? So a good trader is always looking for opportunities, and you don't know if that level is going to hit. But if it does, you want to know what you're going to do. Like, you don't want to be caught with the pants down and being like, oh, darn, it hit that yesterday and already bounced 10%. you got to look for these levels ahead of time. This is why it's a job in a way, right? Whether you're a beginner trader or an advanced trader or a swing trader or even an investor, you kind of have to do your research. There's a reason why the hedge funds, the big institutions, they pay these guys millions of dollars to do this research to find these levels. And here I am doing it for you guys because you guys are awesome and I love you guys. So, I'm here to help you guys. I want you guys to learn this type of stuff. But literally, what I just showed you is something one of these guys would that probably has a $500,000 salary would be like showing to the top guys. Hey guys, look at this level. If it pulls back here, we got to be a buyer. And I'm just here to show it to you guys. So I love that, and I'm going to continue to do that. All right. Going back to a couple other things, Pepsi reported earnings this morning. Remember, Pepsi is just really, there's not many companies reporting earnings here. If we look at the chart on Pepsi, it did dump out. They missed revenue numbers, I believe, and it did dump out, but it's actually come all the way back to the flat line here. So not a very big move on that front. Basically a non-event. If we look at the daily chart just to see where the daily chart is, I have a bunch of trend lines down here. Look at this. All these trend lines, major support. You can see how long ago I did that analysis because the trend lines stop extending. I think I can make them extend out, but I actually kind of like seeing, well, when did I do that analysis? But basically for me, this would still be good levels. Although look, so see how these are upsloping trend lines? So now the lowest level is really 157-ish or just below, and the highest level will be 158. So somewhere in that vicinity, I still like as major technical support. Now it doesn't look like it's going to get down there, but it's just good to know the levels. We just discussed about how it's important to be prepared. All right. So what else do we have on tap here? So yesterday we saw Amazon selling off on a downgrade. We saw Apple selling off on a downgrade, but Nvidia was strong, and Nvidia closed above this line. So this is a downsloping wedge pattern trend line, right? Downsloping trend line. We closed above, we confirmed, and it is up again today. So up, here we go. So now, interestingly enough, look at the pre-market high. So we just flipped over to the 10-minute chart, just so keeping everyone kind of keeping pace. I know sometimes I go real fast, guys, and I apologize if you're new. You may have a little trouble following me, but my brain is always moving a million miles a minute here. But I want to make sure you guys get as much out of these game plans as possible. But notice here, this is yesterday's high. This is aftermarket. This is pre-market right here. Look at the high here, right to that high. But my point being is if we go back to the daily chart, this is probably a breakout that, number one, we hit yesterday this high, but I think we're probably at least going to go test the 136 level. So I actually think there's more upside here on the chart of Nvidia. And could we even test the all-time highs? We could. That would be pretty remarkable, but that would be then a shortable level, a potential M top. By the way, this chart, what does this chart kind of look like? Does it look a little bit like the Bitcoin top or some of these others? And for that to be complete, you'd actually have to go take out the all-time high here and put in a little higher high and then have that bigger rollover, which, by the way, don't discount it. Major tops are made that way. Major tops take out prior highs because it gets people maximum bullish. It stops out all the bears, well, majority of the bears, and that's the kicker, right? So if we just draw this in, let's draw it in here. Tops are made like this. You have the big move up, then you have this big flush out, right? Big flush out. Then you have the next big bull move up. And right at double top, everyone's like, oh, it's, let's see if it breaks. And then it breaks and the media goes crazy, right? They're like, oh, new all-time high. It flashes on the screen on CNBC and Bloomberg and all these places. And what it does is it gets anyone on the fence to go long and just be like, all right, I got to go long. But they're going long at the highs. And it also, anyone who has a stop right at that high, which a lot of people would, right? You'd have a stop right at that high, takes it out, goes higher. And then once they basically get everyone on the wrong side, then the bigger drop comes in. So just one thing to keep an eye on. But remember, this happens in so many charts. In fact, in the natural gas chart, this is exactly the high as well. So Bitcoin, natural gas, I mean, you could look at a million charts and see this thing, but let's look at natural gas as long as we talk about that anyways here and just get into it. So nat gas is down a little bit today. So I continue to be in the money on my short on nat gas, which is nice. But my point being is that if we go to our bigger time frame, look at the top back in 2022. It's basically identical to Bitcoin, right? Big up move, flush out, comes up, takes out this high right over here, took it out, and then look at what happened to natural gas. Look at the drop, massive collapse back down. And so again, my point of pointing these out is that I want you guys to kind of recognize. So I don't want anyone when it breaks a high like that to be like, oh, I've got to go long. I've got to buy this breakout. You got to be able to see the picture, right? And you also, by the way, look for negative divergences. Negative divergence. If there's a negative divergence there, you do not go near that. example, case in point on natural gas, look at the negative divergence right here. See? So you had this high. So this high was the highest on the RSI was low. Then it made a higher high, but a lower high, and then an even higher high and a low. This is a triple threat negative divergence. It was telling you price was getting ready to collapse. And then you can see what happens. And price did collapse down there. But that's a great example because basically, for those of you that are new to RSI, if price is going up, RSI should be going up as well. It should be going like this, not like that. That's telling you that there's institutional kind of dumping or distribution going on in the chart. All right, let's go to Bitcoin real quick here. Let's see what we have on Bitcoin as we go through here. Bitcoin on the charts. Let me flip over to the daily chart. Here we go. And again, I'm on my laptop here with multiple screens hooked up. But man, oh man, it certainly is a little trickier than in the studio. But hopefully my audio is okay for you guys. I apologize if it isn't, but just bear with me the next few days as we're riding out this storm. All right, so what we see here, guys, this was your pivot line. We got the bounce yesterday again. Notice how Bitcoin was up here, got rejected and pushed back. Why did Bitcoin pull back there? Well, basically, you just look at the stock market, right? Stock market opened around the flat line, and then it sold off and closed at the lows. Bitcoin was up, sold off, closed at the lows, right? So that kind of same at-risk asset type behavior was going on. Now, today, stocks are up a little bit. Bitcoin's up a little bit. I mean, to be honest, it just looks more and more like that. As long as it holds the pivot line, you maintain a neutral to bullish bias, upside target potentially 68,000. If it confirms below the pivot line, then it's going down to probably 52,000, maybe even 49,000. Gold today, not doing a whole lot here, just kind of hovering around the flat line. This has been my level. Remember, I gave you guys 2660 as major resistance literally a month ago. We went right there. And that's where it stalled out. Now, I will say that it's holding up relatively well. Like sometimes you go into a trend line of resistance and you get this massive rejection, right? You go like boom, and then you get like a big pullback like that, right? In this situation, we're doing much more like this, which is actually good. It's consolidating and digesting the move right here. Now, it doesn't say we're not going to pull back to 2,500, but what it tells me is that there's eventually going to be more upside. I still think you are due for a pullback to 2,500, a little flush out of the weak hands. But again, there's no guarantees that, eventually, my point is my target, my upside target, my next upside target is 2,710, then even 3,000. And I do think that eventually we get there. Silver, let's take a look at silver here real quick, guys. I still think silver comes back in here. Again, down sloping trend line, retrace to the scene of the crime. You can see I've annotated this already with arrows. Even last week, I had these same arrows up, and I can just move them over a little bit. So I'm still thinking we come down here, and then your next big move starts, which would be, again, see the wedge pattern? This is classic breakout of a wedge pattern, retrace to the scene of the crime, and kaboom to the upside. And kaboom, by the way, is a technical term. No, I'm just kidding. All right. Lastly, let's go over oil here, U.S. oil, see what we got on that front. Oil is pulling back a little bit here. I have nibbled on a short on oil, as you guys know, but beautiful pullback today. In fact, we added yesterday in smart money stocks and ETFs. We added to that short position. So we're now find ourselves break even to in the money on that. The great thing about dollar cost averaging, folks, amazing thing about dollar cost averaging. Now, listen, I'm fully aware that if things escalate in the Middle East, this could go back up and tag 80, in which case I dollar cost average there. And that's my line in the sand. That's the one I don't want to see it confirm above. Anything in here, this is still to me likely headed lower, especially if I'm correct that the economics, even though the narratives out there are, hey, there's no going to be no landing. The Fed has engineered the perfect situation here. I don't buy it for 1 second. I don't think any citizen in the U.S. that goes out and about and sees what's going on out there actually buys it, that everything is hunky-dory and this is going to be perfect. Again, I think there's certain groups that are doing great. I mean, heck, I'm doing fine too. I am. But I see what's around me. I talk to people. I see what other people are dealing with. And again, I just don't think that that's going to end in a good way. It's ultimately the start. It's just the stock market has helped people quite a bit that have been in the upper tier of income levels. Okay. On that note, guys, that's really all I have for you today. So as always, guys, you guys are awesome. Thanks for bearing with me, by the way. I'm in a hotel room here in Orlando, actually. So again, just kind of hunkering down. We're still going to get hit over here, like I said, but it'll be a little weaker, and we're not on the coast, so we don't have to worry about the storm surge coming in, which again is the key thing. And the kids are loving it, by the way. They're like, new little cottage we're in here. They're like, just enjoying their life. So that's all we can ask for. Thank you again, guys, for being supporters here at Verified Investing. Understanding technicals and data are the most important thing out there. Everything else is hype or narratives, and that's what gets investors. That's what the institutions want you guys to get absorbed in. By the way, that's the same thing with politics. They want you to get all wrapped up and be like, oh, I hate that side, or oh, I hate that side. When in reality, if we all sit down together, we probably have major common ground. But it's what do they say? Divide and conquer, right? And that's what we have to avoid. So my point again is that focus on data and logic and charts, and it will be your fastest route to making significant amounts of money. Mainstream media, social media, frankly, bad stuff. Just gets you on the wrong side and gets you too emotional. Have a great rest of your day, guys. Thanks as always. I should be back with trading the close today. Have a good one. Take care.